Hello traders and welcome back to the Forex Geek. In today's video we are going to be talking about the bearish Marubozu candlestick pattern, which is one of the most crucial candlestick patterns for identifying bearish momentum. So this pattern is a clear signal of strong selling pressure in the market, and understanding how to spot it can give you a significant edge in your trading strategy. So by the end of this video, you will know exactly how to identify the bearish Marubozu and when to enter and exit trades based on it. So stay with me until the end so you don't miss any key details that could help you take your trading to the next level. So without wasting any much of your time, let's get to it. Let's get right into it. So we'll start with the pattern structure. The bearish Marubozu presents itself as a single red candlestick with distinct characters that make it instantly recognizable on your charts. So this formation consists of a long bearish body where prices open at the highest point and closes at the lowest point of the trading session, leaving virtually no shadows or wicks on either end. As you can see, this is the bearish Marubozu on the screen. You can see. So the most significant aspect of this pattern is its solid body, which represents sustained selling pressure throughout the entire trading period. So when you observe a bearish Marubozu, you are witnessing a session where sellers maintain complete control from open to close, pushing prices consistently lower without any meaningful buyer intervention. So while the textbook bearish Marubozu shows no shadows or wicks at all, let me just zoom into this. While the textbook Marubozu shows no candle or wicks at all, you may encounter variations with minimal wicks. So these are still valid signals as long as the shadows don't exceed 5% of the total candle length. So the key is to focus on the dominant bearish body, which tells the story of overwhelming selling pressure. So the pattern significance increases with the time frame. A bearish Marubozu on the daily chart carries more weight than one on a 50-minute chart. So this relationship between time frame and reliability will become crucial when we discuss the trading strategy. So let's just hop on the charts and try to spot this bearish Marubozu, and then we can talk about the trading strategy, how you can trade with it. So okay, let me use the cross. Okay, now this right here is the bearish Marubozu. This is a perfect example. Let me just zoom into this. This is the bearish Marubozu. You can see that long red candle, that long bearish candle with minimal wicks or shadows above or below. So this shows that there's enough selling activity in the market, and this is another one also. This is another bearish Marubozu candlestick pattern. This is another one right here. It's quite easy to spot on the market. It just shows enough selling pressure and the potential for that selling pressure to continue. Okay, and there are so many of it. I'm just gonna try to find them, find the valid ones. Remember, the candlestick should be minimal. The wicks, I mean, should be minimal, shouldn't be too much, shouldn't exceed 5% of the candlestick body. So this is another one. So these are just examples of the bearish Marubozu candlestick pattern, and this just signals that sellers are in full control of the market, and there's a potential that they will remain in control. So it's essential you spot them at key levels, key resistant levels. So let's talk about the strategy. The bearish Marubozu offers precise entry and exit points for high probability trades when properly executed within a comprehensive strategy. So let's break down the essential components of trading this pattern effectively. So the most effective trades occur when the bearish Marubozu forms at key resistance levels or after a prolonged trend. I would say uptrend in this case, or pullback. So your entry should be placed at the next candle's open following the Marubozu's formation. This approach ensures pattern confirmation while maximizing potential profit. So let me just zoom in on this example we had right here. And it's essential you always confirm your trades with volume analysis. A bearish Marubozu accompanied by above average volume significantly increases the probability of a successful trade. So this volume confirmation ensures institutional participation and validates the bearish sentiment. So I'm just gonna analyze the charts to see how we were able to take take this trade. So you can see we are bearish right here, and we're just having pullbacks, just having bearish push, pullbacks, another bearish push, pullback, another bearish push, and it's expected that this area should be used as resistance. So you can see price pull back into that area, and we are expecting another push downwards. So that's the classic market structure for a downtrend. So I would say this is our support level, and we should be looking for price to hit this level at, this is our resistance level, sorry about that, and we should be expecting price to hit this level and give us the push downwards. You can see the rejections and several candlestick patterns showing that we should be pushing lower. And as we started pushing lower, you can see these two Marubozu candlestick pattern. We have to actually the first one and the second one. So this shows that sellers are in full control. So the entry should be at the open of the next candle, like we discussed. And for this first Marubozu candle, the entry should be at the open. You should also confirm with above average volume, as you can see. Corresponding here, you can see this volume increases and enough selling volume increase right there. So that shows we should be looking to take a sell trade with our bearish Marubozu candlestick formation here. So looking at the sell trade from there, we could just place our sell trade here, and stop loss should be at the high of the bearish Marubozu candlestick or at the major resistance level, and your take profit should be at a major support level or a 1:1 or a 1:2 risk to reward ratio, depending on your preference. So that was how we were able to take this trade using the bearish Marubozu pattern in line with market structure. So remember, you should always trade with in line with key levels, key support and resistance levels. So let's look at the next example. So for this bearish Marubozu candlestick pattern we had here, you can see we are quite close to breaking this major resistance level, and it's showing that sellers are in full control of this market at this point in time. So you could just look to take a sell trade at the opening of this. You can see this increasing selling volume right here, corresponding with this bearish Marubozu, showing that sellers are in full control. So let me just delete these arrows. So you could consider taking sells, but you should know that these sells should be limited because we are at the point of breaking this market structure here. So we should be expecting a reversal back into this range to find a possible continuation of this bearish trend. So we're able to catch a 1:1.5 risk to reward ratio there using that bearish Marubozu candlestick pattern. And let's just go to the next example. So you can see this, we'll be expecting a pullback into this zone. Like I said, it's always important you analyze the general market structure before looking to take entry points with the bearish Marubozu candlestick pattern. So putting our Fibonacci 2 Fibonacci extension, you can see this price level, the Fibonacci extension level, the 61.8%, and price reacted from that level. You can see right there, from the 61.8 level, reacted perfectly. So we should be expecting a continuation of this bearish trend. So you can see at that level, you see the bearish Marubozu candlestick patterns. We had about two, I guess. Okay, let's just pick this one in the middle. Remember, there should be minimal wicks or shadows. So you can see that clearly right here. And looking at this, we'll be looking to just place a sell trade at the opening of the next candle, with our stop losses just above the high of the bearish Marubozu. And zooming out, you could put your take profit, you could set your take profit at the next resistance or the swing low, at the next support, I mean, sorry about that, or the swing low right here, which is our take profit. We'll just be using it to continue the downtrend, which is already in play. That's how I would have been able to take this sell trade using the bearish Marubozu candlestick pattern. Remember, we are trading in line with market structure. See this break of this level, this support level right here, and retest of this level. So we have this bearish Marubozu confirming that. So we could look to take an entry from there. These were just continuations for this bearish trend. So that's basically how you can use the bearish Marubozu to trade. I'm just going to look for another example on a different pair. You can see this bearish trend right here, classic bearish trend, and as price hit this resistance level, this trend line resistance level, you can see the bearish Marubozu showing that sellers are now in full control of this trend of this market right now. And you can see with the confirmations, with the volume confirmations, you can see increasing selling volume right there. And we have the bearish Marubozu clearly shown on the chart. So you can look to just place your sell trade at the opening of the next candle, stop losses at the high of the bearish Marubozu candlestick pattern, and take profit at significant support levels or swing lows. So you could also combine the Marubozu candlestick pattern with your indicators like moving averages or RSI or your MACD to confirm your trades. So it's always wise to confirm your trades with additional indicators and also with price action. So avoid taking trades when the Marubozu forms in ranging markets or against strong upward momentum. The pattern's reliability increases significantly when it aligns with the higher time frame trend and appears at key technical levels. So alright traders, we've come to the end of today's video. Remember to always combine this pattern with proper risk management and never rely on it in isolation. The most successful traders, the most successful trades, will come from patience and waiting for those perfect setups where multiple factors align. So if you found this video helpful, if you found value in this analysis, make sure to hit the like button and subscribe to the channel. Turn on the notification bell to stay updated with more advanced trading strategies and market insights. So until next time, happy trading and trade smart.